Okay, let's get this started. We got our 9:30 just about 2 minutes away. How's everyone doing this morning? I'm good, Kyle. How are you? Let's see if we can get a nice continuation today. Missed a nice setup yesterday. Wasn't able to get on live with you guys, which was unfortunate. But the move did play out right here. Didn't continue down. I thought this was going to keep going yesterday, but like I said, this week is FOMC. So today, having this like retrace and taking out some internal into this range here is good. Seeing this kind of head and shoulders pattern here. We'll go into what I want to see here. We've got New York high level here and low. Okay, we'll go into the 1 minute here, right at the open here. So let's see if we get that sweep above. I want to see it go higher first, take out some highs, and then give us a move down if we can. Nice equal highs stacked up here. Okay, there's the open. Let's see this movement. No retest first. We're going straight down. So it's not what I wanted to see, but let's roll with it. Let's see what happens. See where we're going. We might have already gotten the move like here, and this is the continuation already, but you can see how we had the shift. We had the internal high swept. The change of character was below any of these lows here. So, and then now we have the break below the 4-hour lows here. Actually, this is what I wanted to see. What I wanted to see was a break below here, right? And then so now we have a new range forms, right? This high to whatever low this is probably going to react to one of these OBs or imbalances down here. We'll get a retracement, and then this becomes our range, and then we get a continuation back up, sweeping internals, and then continuing lower. Good morning, Anna. Good to see you. So this is a nice move down. I want to see a nice continuation through that New York low and then through this 4-hour low. All right, so nice trade through, right? We got a new range here. Even if you get like a continuation like this where we get closure through here, right? There's the closure. And then we have swing range, comes back up, sweeps the internal range like that, right? Into the order block, and then the move down. All right, so while we wait for close of that level, the swing is, this is that 4-hour level here, but the swing is right here. So I'll use that as the reference point actually. Use this, closure through here. Okay, and we're still moving lower. Equilibrium right here at the day open price. We traded through, pre-market low, traded through, right? So now I want to see a retracement if we can, internal range that we can sweep into the break of the low here or the order block, and then the move down. Psych levels that are around the area, we've got 180 and we also have the 200. So those are two levels you can watch for potential reactions from. I will get into the setup yesterday for those of you that attempted it. I know Anna, I think, got a continuation out of it. That did work out, right? Eventually. No? 2 points away. All right, we'll get into it. Okay, it's not a great result, but not a bad result either. Okay, so now we want to see an internal high formation, right? Inside of this imbalance here. If we get a mitigation, let's see what happens. All right, so we got a potential swing high here. All right, trading back into this bullish imbalance. So the bullish imbalance is holding for the moment. So here's where it kind of gets tricky here, because we do want to see that inverted. Otherwise, this could be a move higher. right, there's a move higher. So we've got swing high here, we've got the imbalance here, we've got the mitigations here, lows, consolidation. This is an order block here. Psych level 180 and 200. You can see a retest of that 200, but here's a sweep of the previous high here. So we get sweep of previous high, internal high rather, and then a closure back below, and also a close below the psych level. That's a good sign. 10 seconds, let's see. Oh, that's a good movement there. 3, 2, 1. Okay, closed in between. There's a nice wick rejection there. Let's see if we get a bearish candle close underneath the psych level or not. Okay, so this whole swing right here is what we're looking for price to hold right now. So from this high to this low. So if this closes right now, I'm going to take this short right here. 6 seconds. I'm going to take this short on this bearish candle right now. If we close below, which we're going to, it looks like 177, 180, right? So there's my entry. My stop is going to go above this structure. So I would say 70 points is safe because I don't want it to go above what we're doing here right now. It could put it above here, but I still think that we could even sweep this level into this imbalance here, and that would still hold, and my stop would still be okay. And because our 1-to-1 here, just taking out this low is going to give us 70 into this imbalance, I think that's good enough. So my stop is going to be at 250, and my take profit is going to be just underneath this psych level at 120. So let's say 115, or let's just say 120. Because I don't know if it's going to go into this imbalance or not, but we could take profit after this low, or we could break even. I mean, we could see how it moves afterwards, but I'd really need to see some activity here, right? There's the 120, or sorry, the 200 big figure hit. And now I need to see some of these bullish candles traded back below. Because right now we're still actually technically bullish off of this imbalance here, but I'm banking on the structure, the bear structure right now holding. So even if we do come up here a little bit into these highs, like I said, our stop should still protect us, even if we get a little drawdown. Overall, not too bad, I would say. If we just kind of hold this structure here, it'd be ideal. Right, and there's a nice engulfing candle with the divergence. Okay, so let's see if we get this to continue down now through. 1-to-1 would be 110. All right, but I mean, just taking the low here and hitting that 120 I think is good enough. 60 points I'm good with. Let's see if this plays out. Yeah. Instead of going for the 1-1, you mean? Yep. So, I mean, that's the idea here, right? I don't really care if we get the 1-1 and the extra 10 points, right? All I'm really going for is just so that we take the liquidity, because that's what I know should happen if we are bearish. After we take the low, there's no guarantees how it wants to retrace. And obviously you can see it did come back, right? But just it did a big retracement first. So the fact that it held the low, so you were, I don't know, I forget where it was. Was it this move? So yeah, I mean, it's got to generate liquidity. So, you know, if it does do that at a moment and it turns around at like 2 points away from your your take profit, and it's already taken a low, then, you know, that could be the case, and it could come back later, building all of this liquidity in for the move later, right? All this liquidity is now built under here, and that's what we're going for if this continues, which is what we're banking on today. All right, looking good so far. Nice shift there, nice return, right? I think our entry is as good as it could have been. I think it could have been a little bit better if we, I mean, if we anticipated the 200 reaction. Oh, it's coming back up now. Let's see. Let me spoke too soon. But this is fine too. Like, this should be a, you know, manipulation if it doesn't turn around here. Then the order block or the OB or the imbalance here continues to hold, then, you know, we'll see a break of structure above here. We'll see a break of structure above here. So these are still areas that we could still sweep and come back from. Sweep and come back from. Our stop is up here. So see how this messes around. We're still closing underneath that sweep high, right? So that's good. Still closing underneath that 180 psych level here, right? Just barely, but we did. So it still looks all right. Just kind of hovering around entry. And I also told you guys to expect this, right, in the pre-market, because it's FOMC today, right? The morning could just chop around. I mean, it may not give us a big move down, right? So that's why I'm just targeting like the most recent low, the most logical, closest low. And I'm not going to really push the envelope after that, because it could just chop afterwards. After it takes this low out, come back up for these highs, mess around the highs, then come back at lows, right? And then FOMC comes around, and then we get the big reaction. All right, let's see. So, I mean, we did take this low out. We did close above here on that 15-minute candle. My stop is above here, right, where this order block is. I'm going to expect price to hold the order block and continue lower. Maybe 10 o'clock volume does that for us. All right, so while we're sitting here waiting for that to play out, let's go a little bit over yesterday's setup, okay? So I'm going to roll this back here to about 9:15, right, just before market open, right? And so I had basically laid this out in the pre-market that I wanted to see price come up, right? Tag an imbalance or order block or something up here, right? And then continue lower. So as you can see from the opening, right, we get that, you know, initial kind of pump to the upside here. And I guess we should be looking at the 1 minute at this point. So there's the open, right? So we get the pump to the upside. We have the imbalances up here, the order block up here. And right now, as it is, looks like we have a sweep of this high, right? This high in the 1 minute. Our 15-minute high on the 15-minute is looks like this high right here. Okay, but we have a big push down, and then we have this imbalance. Okay, so our higher time frame point of interest can also be an imbalance. It can be an order block, right? But there's an imbalance here that we've already mitigated. There's the order block above here that I think that the indicator shows up here. Yep, right? So those are all points of interest that we can trade into. So we need a point of interest, right? And then we need a sweep of liquidity. So this will be a sweep of liquidity. Right now it's going to be these highs or this manipulation here. But let's roll price forward here. What I want to see is a sweep and then the change of character, right? So let's see here. We got, all right, so there it is, right? There we have a sweep of this high right here into the psych level here. We've got our 15-minute imbalance, and now we've got our sweep of liquidity, and now we have our change of character. Once we get a change of character, what do we want to see? We want to see price 2 form a range low with a swing like that, just like that. Okay, so we've got high to low, and now we want to see that internal structure, right? This change of character level is here, so we are reacting to that. We didn't get a change, an internal low in between, retesting this change of character. So let's see what happens with this. Do we get a continuation? Oh, looks like we might be moving through there. Nope, it comes back. So technically this is our internal swing right now, right? So we want to see that swept. Like so, right? And now we want to see a closure back through. Psych levels around this level here. We got 220. We've got 200. Again, same levels, right? And now this is the high that we want to see price stay underneath. So let's see if we get that closure through. Closure through there, okay? So now if we get that closure, we can take a short here. And again, our structure starts from where? Starts from all the way up here, but where's our order block? Up here, right? So we could still get an order block move. So I guess the stop would have been kind of big, 90 point stop. I guess we could do, you know, above this structural high, 80 points, just like today, kind of like 70, 80 points, right? And then let's see what this is. So our 1-to-1 would be right here, taking this low. That's really all we want. So let's see if that happens. And yeah, pretty much a straight move down. And look at that, we even get all of the rest of this, right? So we could have gotten a 2R. Yep, pretty easily as well. And that was the setup. Pretty much, right? And then we get a continuation through here. Let me just leave this and see where we're at here. Oh, we're back. All right, so we close through here. We're coming back up above here. So I guess we're gonna look for a sweep of this. Just kind of rehash what we were talking about here. So again, this is our structure, right? Internal high here now, sweep above that high. And if we get a closure below, that would be good. But right now what I'm looking for is, because you can see our structure is actually still bullish, right? Now I want to see an internal change of character. So now with the sweep of this high, right? If this sweeps, which it looks like it will run into this level here, and then now I need to see a closure through here for change of character, right? That tells me that we are actually, in fact, going short now from this point of interest, which is this imbalance. 1 minute imbalance. All right, we're very close to our stop here. I don't want it to go above these highs just yet. But let's see. This is why my stop was this high, because I had to account for the range, right? This range high and low, and for the possibility of price rejecting or sweeping this internal high here and not using this as the internal. Sometimes the internal, is not the actual internal because it's a 1 minute chart, right? So 1 minute swings may not be the most reliable in most cases. 1 minute imbalances, right? Even though we have a strong push to the downside here, this can still act as internal liquidity. Psych level is the 250 and the 20, right? 20 and 50. So putting my stop above the 50 here, I'm assuming that price will hold that. If we go higher and we run these levels here, then the bigger range is what I would consider. So meaning like this high to this low, right? And maybe we come up and sweep up these internal highs, and this would be a 15-minute model, right? Versus our 1 minute model. So if our 1 minute model doesn't hold down here on the lower time frames and the fractals, then it's, a bigger model that's being played out. So 15-minute high and low here, you can see break of structure, right? Lower low, lower high. So I'm expecting this high and this low, and then an internal premium to be swept out, and then a continuation lower if we're going to continue lower. Okay, and this is actually what I did frame out in the pre-market, but because the opening move went lower, first instead of higher, we took this instead. But we got a divergence here. We got the imbalance holding here. Let's see if we get that closure underneath. This is what we need. Okay, taking a little bit of heat here, but let's see if we can get a nice movement down. Okay, so we do have the reaction, we do have the divergence, and now we just need to see the closure through. All right, last 5 seconds. Let's see if we get it underneath or not. It's right on the line. Okay, better movement now. All right, that's a good candle if we close like that with a big bearish engulfing, and also like a close underneath the equilibrium of that range. Perfect. All right, so let's see if we get that to kind of flow through. Now we got an imbalance that we can see form here. $20. See if that holds. It should hold. And now we get that change of character if we close under there and underneath the day open. That would be best. There we go. All right, so if we had waited for this to get swept out here, we could have got a much better entry over here at 220. Hindsight, obviously, right? But taking that entry would have given us a 30-point stop, right? And then a much better, even like a 2-hour target down here just to the next low. All right, so now we got the change of character. And we have retest into the imbalance here and a reaction out of it. I'm going to see a close back below those levels to confirm. Yeah, nice job, Kyle. You're getting those consistent ones now, which is awesome to see. It's taking you less time, I think, right, between payouts. Five payouts this month, awesome. Oh yeah, I think that is right. I'm not sure though, because I don't trade on top step, but I think that sounds right. Muffin Man, how come I stopped using the TDI and EMAs? Good question. Because those are, price lagging, right? So I don't really gain anything from the EMAs and the TDIs other than like they print what price is already done and then they show you the information, whatever the indicators show, it's lagging against price. So sometimes they'll a TDI signal or an EMA signal may give me some kind of confirmation, but it'll be already too late based off of rather than just like understanding what price action is doing. And also, I kind of answer this question about the BTMM as well, right? Because a lot of you guys know me from the BTMM videos and trading BTMM. So, the fact that I don't trade BTMM anymore doesn't really mean that, it's a bad strategy or that it doesn't work. It's just that I've moved away from it personally. So my trading is now like a combination of everything that I've, learned over the years. And then I just pick apart concepts that make sense to me, and then I kind of mold them into my own trading style, which is what everyone should be doing, right? So just because you guys see me not trading BTMM anymore doesn't mean that it's not a good strategy or that it's not working, because I can see a lot of people still using it and having success with it. So it's not like it's a strategy that doesn't work, because all strategies work at some, the people that post strategies on YouTube and things like that, they're posting strategies that work, right, for them. So if you take that information and then you apply it to your own trading, and then you can get similar results with it over time, right? It's going to take some time for you to backtest and to trade live and to get data for yourself to prove to yourself that the strategy works. That's where the disconnect is. A lot of people will try something for a week or 2 weeks, right? And they won't get the same results, or they won't get consistent results, and they'll think that the strategy is broken or that it doesn't work. But you got to give it time. You got to give it a lot of time, 6 months, a year. And then you have to compile that data, make sure that you're journaling your trades, make sure that you're taking notes and on your entries and things like that and what you're doing every day. And then that's how you can get a reliable statistic to say, okay, this strategy really isn't working. After 6 months and trying these entries and doing everything that's I'm supposed to be doing, right? Now I have statistical data that backs up, that says, okay, this strategy isn't working. Now I can go to a different strategy and try a different strategy, right? But that's not what most people do. Most people will go through a few days, a couple weeks, right? If it's not working for them, they'll hop to something else. They'll find another video. And YouTube is not without videos these days, right? You can find thousands and thousands of hours on YouTube on anything, right? If you want to learn it. But that's the thing, is the more knowledge you consume, the less action you take. If you don't apply any of that knowledge that you're consuming, then you're not really doing anything. So it really comes down to what is a strategy that resonates with you? Does it work for you, right? And you have data to back it up that it works for you. Then keep using it, right? If it doesn't, then you can move on to something else. But if not, then you're just kind of spinning your wheels. You're not really making progress. You're jumping from strategy to strategy, or video to video, and you're not really making any progress, right? So for me, with BTMM, I started out trading BTMM. I started out trading the patterns, the EMAs, the levels, right, TDI and all that stuff. But over time, I figured out that there's other concepts that kind of fill in the gaps for what BTMM teaches. There's some things that BTMM doesn't really explain, right? Or there's some fallacies with BTMM methods that are that don't really make sense in some respects, that I found other concepts to kind of fill in those gaps for me, right? And that's where kind of my trading has evolved over the last close to now 10 years. It's crazy to think about that I've been trading for a decade now. So like I said, it's not that it doesn't work. It's not that it's not a good strategy. It's just that I've moved away from it personally, and I've kind of incorporated other things into my trading to where my trading is now, to what you see right now that I'm trading live in front of you guys. So I will eventually make a video about it, right? Because I get so many questions about it every time someone comes on the stream. It seems like they're asking me why I'm not trading BTMM anymore. But so I'll have to put a video up, and that's also because my YouTube library has all the BTMM stuff from before, which is understandable, because a lot of you guys find me through the BTMM videos. So I understand the question, but yeah, I don't trade it exclusively anymore. I trade what I trade right now. But I appreciate you guys jumping on the stream. If you guys have other questions, you know, feel free to ask. If you have BTM questions, I probably still could answer some for you. But you know, I'm so far and away removed from what they're doing on the BTM side now. Like I don't know if they have new concepts or if they've revised their old systems and methods and things like that. But you know, it's not really. I've moved away from the core of what the BTM method is and what they teach. We still have things that are, you know, still related to the, like obviously the session times, right? Stop hunts, right? And we're still looking for the shift and things like that. I don't look so much for like patterns like M&W patterns, but I do look for those shifts and confirmations after liquidity is swept. And you know, BTMM is the same derivative as, you know, SMC and whatever is, you know, out there right now. It's all from the same, you know, foundational concepts, right? Just different names for different things and different labels for different things, but it's all pretty much very similar. The approaches are different, that's all. And here's the chop, right? So we're going to sit through this chop, I bet, for a while. But it looks good, right? The sweep here looks good. The level here looks good to hold. We have the change of character. We do have the retest and the hold of the imbalance. We do have the failure swing, right? We just want to see this now continue to hold on through to the lows. I think taking this low here is going to be, you know, the target. Obviously, we have to get through this low first. And we may get another retracement back up here and another, you know, consolidation around here. But as long as we stay and hold underneath, you know, the structures, I think we'll be okay. And the structure I'm now holding is this one right here, right? And we did get our move all the way back up to that order block. We did get that reaction. 10 o'clock did close pretty bullish, but, you know, let's see what the next candle here does. I think the 4 o'clock looks like it's a... yeah, it's like a big doji candle. Okay, so not really bullish or bearish in that respect, but we are moving lower here. And ultimately, if we get down here below this low, that low should be taken. That should be taken, no problem. So getting down to this, you know, getting through all these bullish candles here, taking out this level, this is probably a given. Now we can see nice equal lows here, right? So we're going to induce some buyers up and probably consolidate, right? Get more buying liquidity down below these levels here, and then we'll eventually go come down and take out all of this below. The gap is right here. That'll be the FOMC target, probably, if we do continue lower from FOMC. And then we'll see if we get further movement down, and this becomes the big retracement that we've all been waiting for after climbing up to new all-time highs. All right, I doubt that that's the case, though. I think that we will still make another move higher, because we always do that, right? We always get to all-time highs. It makes a big retracement. It does come back. Like, even if it doesn't come back all the way to all-time highs again, you can see how we made a big return back to the level, and then we made another push down before then continuing higher. So if we get a repeat of something like this over here, this repeat structure, all-time highs usually give us a big retracement, but then that retracement doesn't usually follow through the first time. It usually goes in the next pump up and then the move down. So I don't think that this is going to be the real retracement just yet, or the big retracement just yet. I think that we will still want to go higher first, just to at least retest levels up here. All right, this next 15-minute candle closes in 30 seconds. Let's see how we close. Looks like it's going to be bearish. And then if we can get a closure underneath equilibrium, that would be good. But let's see what happens in this next 20 seconds here. No matter what, we are going to get a 3-bar swing here on this 15-minute, right? And then hopefully we don't get back above this candle's high. So 220, 225, really, I don't want to see price go back above. So right there, you can see that we did sweep out this high here. We made lower, right? And then we swept out this high here. So already this tells me that the movement is not really confirming to the downside, right? I'm going to move my stop down just a little bit down to this high right here, okay? Because this is the reaction that I wanted. If this doesn't hold, you know, we're probably going to go higher. We're going to take out these highs up here. So just reduce it a little bit to 60 points there, and then that 1-to-1 below this low if we can get it. If not, we'll take a stop out, and then we'll see what FOMC does, and we'll come back tomorrow. All right. There's a nice divergence there. Yep, so this level right here, as long as we hold above or below that, I think we're good. This is the next high that we want to see it close under. We did see a couple closures under, but now we're back above it, so it just doesn't look that great in terms of order flow right now of what we're looking for to do. We did get the change of character. We did get the internal sweep, and now we need to see that confirmation, that extra confirmation here on the closure below. I can see that we're still kind of holding that 15-minute low, right, inside this discount. So technically we still haven't really, like the move I kind of pre-planned in the pre-market today was for us to close through this level, right? So we didn't get that closure through. But when we get the closure through, it's going to form, or should form, a retracement. That retracement was what I wanted to see for us to go into the premium. So it'd be this high to this low, whatever the low was. Let's just say it's this low. So the current range that we have on here, and then retracing back into that premium here, and then taking out, so like taking out this level. So our current trade idea would be stopped out if this original plan plays out the way I want it to. And then it would come up back up into here, into these levels, right? And because it's FOMC, pre-FOMC, obviously, you know, I told you guys to expect the chop, and so that's what we're seeing. So if it stops me out here and takes me out, then, you know, we'll pack it up and we'll call it a day. But you know, FOMC is the chop in FOMC is always unpredictable. So but we got everything that we wanted to see in terms of a short setup here, just like, you know, we wanted to see the shift, we want to see the change of character, we want to see the retest, the internal highs taken, and then the closure below, right? So we're seeing all of that. Like this candle here, if we close now through, that would be confirmation. But we're not really seeing the follow through. I do like that we're struggling though. to push up. We are pushing up and we're closing above, but it's still like looks like very wicky up here. So okay, that's a nice little spike. Let's see if it continues or if it's manipulation. All right, candle closure underneath those that level right there. Didn't close underneath this high though. Oh, came up real close. Almost stopped out. It was one point away, but it looks like we're gonna get stopped out here. My stop is at 240, and there it goes. All right, so looks like we're gonna go a little higher, right? We're probably gonna take out this structure here, okay, and then it's gonna go in line with the higher time frame idea of price sweeping out something up here, right? It looks like New York high actually. So if we get out our New York high level here, this is the premium of this range. Okay, sweeping that level out. That would be the next area to watch for a move down. But I would look for a change of character shift, right? In order to confirm that sweep. So not just, a 1 minute, but a 15-minute change of character shift. So ideally, if it would give us another move through this, like right now it's just going to go through this high, our change of character will be down here. So it's actually a pretty big shift, right? If it doesn't give us a change of character higher, because right now if it just sweeps this New York high level and then we get a change of character, it has to come all the way back down to here, which is fine because then, you know, the move down to this level is still, you know, it's still a decent move, but that'll probably take us into FOMC territory, and you know, we'll probably likely just you know, wait it out, right? Wait for tomorrow if it doesn't. So in order for me to take this right now up here, look like a higher move and a shorter stop, is if we push up and we make another structure here like this, right? And then we get a change of character below this level here, like this. This is all in the 15-minute, not in the 1, right? And then I can look for a 1-minute setup in here to take this lower. That would be safer. But you know, for me to take this now, to short this now, I'd want to see price to come all the way back down here after taking out this high, right? Not just a 1-minute retracement here. Right, so here we can see New York highs taken, and change of character now on these New York highs would be right here. Okay, so rather than waiting for this to play out like that, right, I would want to see this whole structure get taken out if we did that. And then take the short continuation, because then I'd be a lot more confident in that price is actually going to reverse down, right? Taking out this bullish move on the 4-hour, because that's essentially like a 4-hour change of character without the sweep, right? It's like a structure continuation change of character. So this would be bearish. This high would be in place, right? And then now we're looking for price to give us the lower high here to continue down, right? And that would be the 15-minute confirmation, 15-minute change of character, and then the retrace. But like I said, that will probably take us into FOMC, or it might even take us into the next day. FOMC might do that, right, and take us into the next day. So okay. So yeah, unfortunately stopped out today. That's all right. Thursdays was what? Thursdays was Take Profit Thursdays. That didn't happen today. All right, no worries. We'll come back tomorrow. Friday is yeah, we know what Friday is. So we'll see what FOMC no, today's Wednesday. What am I talking about? Wednesdays is what? What's Wednesdays again? Wednesdays is, oh yeah, what the fuck Wednesdays, right? So okay, tomorrow is Take Profit Thursday, right? So we'll see if we can get back our setup here on Take Profit Thursday, and then Friday we can close the week out. All right. So yeah, if the setup plays out later today, I wouldn't take it because it's going into FOMC territory, right? If it happens after FOMC, but I don't know if you'll be taking setups that late. I certainly won't be. Right, but we'll see what happens with this move here today. Keep in mind that we have this is the whole structure right now, right, on this retracement. So we're still, technically, we still have a premium up here, right? We could still sweep out these highs and trade into this order block, or we could also sweep out these highs and trade into this order block, right? So it may not be, you know, it may not just be this setup. I saw this as the retracement already because we already have the kind of head and shoulders and the move down. So I'm still kind of banking on this holding here. Maybe we take out these levels here and come down, right? But we could still come up here, right? Which is you know, the question mark, because this is still the premium. These are still considered internal highs, and we could still see price come back up to sweep those internal highs, like so, into an order block, right? And then give us the confirmation down. Okay, and that would still be within reason of this shift, right? This swing range here, because it's still very bearish. All right. Yeah, we'll end it here today. We'll come back tomorrow. We'll see what the rest of the day does. We'll see what FOMC does, and then we can kind of take it from there tomorrow. All right. Any questions before we end the stream? Can I show? Yeah, actually, why did not the change of character? Oh, because did I have? No, I did have this on here. Let's see. Change of character is, yep, that's good. Can you show the change of character? All right. Muffin Man, appreciate it. We'll see on the next one, all right? If you have any questions, let me know. But yeah, thanks for joining the stream. John, let's see, not clear on my chart. What is it that you are not seeing? And I'll try to work through it with you here on mine. I think we did get the, yeah, there's one right there. I can see it. You're welcome, guys. Take care. Enjoy the rest of your day. Shows a but no lines. So like here, yeah, it's kind of, I guess it's kind of like very, very subtle. But look, you can see the line. It's right there. It's underneath the candle. I guess this depends on how you have the settings, but you can see there's a line right there. That's where the change of character happens. Is right there. Let's go back to another one. I think that's the current day's example. So if I go back to the, let's do that, and then we should be able to see more. There we go. Okay. Right. So now you can see there's the change of character line, right? There's the change of character line. There's the change of character line, right? So the settings, you can have it, you know, let's see, change of character. I think you should be able to change the, the color here, right? You can change the color. You can change the opacity. I think there was a, okay, I guess I didn't include the way to change it. Like you could change it, I guess, to a solid line if you wanted to. If you want that, let me know if you wanted to change it to a solid line or if this is, you know, fine. But if you want to change the color maybe to like a brighter color or a different color, you can change those, because right now bullish and bearish is set as green and red. But I don't know, let's say because the candles are blue and white, so if you want something to contrast, I don't know, maybe you want to do like orange and yellow, right? Bull for orange and yellow for bear. I don't know if that makes it better. I'm not sure. Can play around with the color settings though. It's up to you. Yeah, but those are where, like, if you can see the dashed lines, that's what the change of character is confirmed, or where it's confirmed. Okay, and I have both of those, the show today's and show most recent on, so that it limits the number of, you know, signals that you get on the screen. Otherwise, it gets very cluttered. All right, guys, that's going to do it. Yeah, any other questions, just send me a message. Otherwise, yeah, we'll see how this plays out. Which one shows the OB? The OB is this one, the premium discount volumetric OBs, volumetric POIs. This one will show you max active OBs, right? Max active FEGs, and then you can change the colors here for those, and the transparency. So for transparency, I talked about this yesterday too, but just remember, transparency means how transparent, how see-through it is. So if you want it to be see-through, then you want this to be higher, right? We're used to opacity, which is how dark something is. We don't want it to be dark. We want it to be lighter on the chart, not so like intrusive, then you want to put this higher. So I have it set at 90 and 95. If I set this lower, like look, I'll put this to 20 and you'll see like the OB will show really bright on my chart, right? I don't want that. Right? I want it to be lighter. So make sure that those are, you know, appropriate to how you want to see it. And then the colors obviously you can change as well. If you don't want it green and red, you can change it to, I don't know, we could change to our normal candle colors, right? I don't know if that's confusing, but blue and white, you can change that to blue and white. All right. Okay, guys. Yeah, let me know if you have any other questions, and enjoy the rest of your day. Good luck with your trades. Watch out for FOMC, and we'll see you guys tomorrow.